All right, today we're going to cover the type of star rating a mobile home park has. It just is a framework for understanding what type of park you're dealing with. And this is useful because experienced investors, lenders, appraisers, people in the industry generally have a pretty good idea what you're talking about when you give them a star rating for a mobile home park. And this becomes very useful when you're underwriting an asset because you can think through on your exit how the buyer is going to categorize this property. And ideally, you want to take a park from one category and upgrade it into another one in order to get that increased multiple, i.e., lower cap rate. And so let's dive into the various ratings. Okay, here we have 10 categories on the left, and then we have the 4 different star ratings. Technically, there is a fifth, a 1-star park, but that is, think about just a bombed out, horrible nightmare that you would never want to step into type of trailer park here. So that's not even a remote consideration for the type of parks you're likely looking at, certainly not the type of parks that we're looking at investing in. And then we have pictures here on the bottom that are helpful for our framework. So let's start with the 2-star. All right, home ages. So these are going to be older single wides. Many of them are going to need a fair amount of work. Oftentimes, you don't know that until somebody leaves, passes away, and then you're going to have to go in. And if you get that home on your balance sheet, there's going to be a big rehab, or perhaps you're going to demo that home. We just assume there's going to be large demolition costs if that home ever turns. The road conditions, oftentimes it's gravel roads. A 2-star park can have paved roads, certainly. Sometimes it does not have paved roads, but that's an easy fix, obviously. What's one of our favorite ones is coming in and repaving the roads. But if the roads are paved in a 2-star park, usually they're in rough shape. You're oftentimes going to have to actually tear up the asphalt and not only just reseal it, but actually repave it. And so budget accordingly. Curb appeal, obviously it's not going to be the prettiest of parks. If it's a 2-star, typically there's going to be a fair amount of junk in the tenant lots that you're going to have to enforce the rules on. The landscaping is going to be all over the place. Some tenants might be taking care of their lots and the grass, others are just letting it grow. It's a wild jungle. Management, this is going to be your hands-off type of management company. Sometimes the owner's 2,000 miles away. It's the only property that he or she owns. Certainly not going to be a professional management company that's on top of every detail with a 2-star park. All right, infrastructure. Now, I don't fully agree with this. We assembled this material from various industry resources. I think the infrastructure, other than the roads, is more of an underground thing that doesn't really factor into the overall appearance star rating. It's more of just a value assessment. If you have private utilities, there's going to be a little more risk, a little more capital involved. So that's, to me, a separate discussion. Here it is in the star ranking system here, so you can include it if you'd like. But other operators feel differently, and apparently lenders, and it's included here. All right, tenant profile. For a 2-star park, on the tenant profile, if this is a park filled with old homes that are run down and the lots aren't being taken care of, generally you're going to have a lower income type of tenant, and there's probably going to be some collection issues. Maybe not dramatic, but unlike a higher quality market, a 5-star, 4-star park, you're going to see some issues on collections. Oftentimes with a park like this, you'll have half the tenant base will pay their lot rent late every month like clockwork. Some of that has to do with when they're actually getting their social security check. But generally speaking, if you're in a 2-star park, there's going to be more collection issues. But overall, you can just think of it from the standpoint of if it is a rough looking park that's not being taken care of, what type of tenants are okay living there? Generally speaking, it's going to be tenants that don't have much of a choice, can't upgrade to really nice properties that are well taken care of, and therefore earning a higher monthly rent payment because they're delivering more value. All right, lot rents, self-explanatory, 100, this is too low. This should be more like, sometimes you'll see something like 250 today, and this can go up to 400 depending on the market. All right, community feel. Once again, this is the last stop on the affordable housing train. People are just focused on trying to get by with what they have. Ton of deferred maintenance. Doesn't have the feel of a community. It's just a random collection of homes and tenants, most of who don't have a ton of options and are just looking for the least hassle, lowest cost option for housing that they could possibly find. Buyer profile. This is going to be typically your one-off buyers that are very courageous, that are comfortable with a turnaround project. Ideally, they're going to be local so they can drive this turnaround. They can be there frequently. It's rarely going to be a private equity firm of any size. It might be a smaller regional focused firm that's very good at coming in and hands-on and turning around a park. And lastly, before we move on to 3-star park, I actually think there's a park in between these two. A 2.5-star park is how I like to think about it, where it's not a complete disaster turnaround. You actually have a good tenant base that pays on time. It's more just it needs a fair amount of capital to fix it up and fix the appearance. And those are some of my favorite investments and those tend to be in better markets with more job growth. And so there's great potential to get it to a 3-star park by injecting some capital and fixing the appearance, maybe upgrading some of the homes and filling in some vacant lots. You can get it to a 3-star park fairly easily versus, say, trying to get something from a 3 to a 5 is very difficult. So you can upgrade it to a 3-star park fairly easily with capital injections and not a ton of manpower day-to-day work to really go through and change the tenant base. It's more of a capital improvement project. And that is a lot less risky than a complete overhaul where you have to essentially kick out and evict the entire tenant base, remove all these homes or fix them up, which is a huge question mark on how much you're going to have to put into each home. And oftentimes you have to demo most of those homes. And so that is a giant project that takes not only capital, but a ton of time and risk. And so to get it to a 3-star park, which is when you start to increase your buyer pool and lender pool. All right, moving on, 3-star park. So as you can see the picture here, we're talking about a much different, just overall feel, call it a vibe when you drive into it. It feels like more of an affordable housing option and less of a hellhole like this X level 2 park here. And in my experience, if I had to guess, out of the 50,000 parks nationwide, I would guess the majority of them are in level 3. You'll see a lot of level 5 and 4 on the coast and upscale markets, retirement communities. But if you just look at every state, especially in the Midwest, most of them tend to look a lot like this. All right, let's tick through the categories. Ages, okay, we're ramping up 20 years on ages of the homes. You're starting to get homes that were built in the 2000s, much newer vintages. You might even get some double wides in this park. Regarding the roads, paving looks fine. There's not giant potholes everywhere. There's not sections where you're going to have to saw cut, rip out all the asphalt and replace it. Maybe it needs to be resealed, which is fairly cheap and looks dramatically different and nicer once you do it. That's oftentimes a great thing to do once you buy a park and you increase lot rents, come in, reseal it. The tenants see the newer, darker roads. Amenities, maybe it has a clubhouse, a playground, but it could have some sort of amenities, whereas the 2-star park rarely has anything on the amenity front. Curb appeal, this goes into what I talked about earlier, just feels a little bit nicer when you're driving through. You get the sense that this is a property for working class families and it is a safe environment where kids can run around and play on the weekends. Management, active, maybe not omnipresent, maybe there's not policies and procedures and they're on top of every little detail, but you can just feel that there is some professional management in place for a 3-star park. Infrastructure, once again, this is more for lenders. We're going to factor this into their rating, not when you're talking to buyers. Ideally, you're going to have city connected utilities, or perhaps you have city water and then septic, as in the upgraded private systems is what that's referring to. Tenant profile, you're going to see a big upgrade from 2-star parks on the collection front, and therefore you're probably not going to have to come into this park and clean house and completely change the behavior of the tenants through massive evictions. Lot rents, self-explanatory here. We're getting a major jump up from 2-star parks. Feel, talked about that. And then buyer profile. Cash flow buyers, sure, but you're also going to get plenty of value add groups that think this park is a good candidate for long-term rent increases. Once again, not doing it in the first year, but over time, getting those lot rents closer to a 3-bedroom apartment, or at least somewhat closer to what the all-in costs for single-family homes are in that market. And so I wouldn't be this specific on who the buyer profile is for a 3-star park. I would just say it's the widest range of buyer groups, which is great from a valuation standpoint. You want a lot of buyers looking at your park if you go to sell. All right, down here we have a picture of a 4-star park, a lot of double wides, and it might even feel like more of a senior community, which oftentimes these are. And getting into the categories here, for the home ages, you're going to see much newer homes. Once again, a lot of double wides. Even if it is an older home, Typically, the amount of money and time and care that's gone into the homes is very visible. So it could be an older home, but perhaps it's been completely remodeled. You see a lot of these in California where it might be a 1980 home, but it's gone through these giant renovations. So the structure and the bones might be old, but everything else is fairly new, which is very common for 4-star parks. Road conditions, you're not going to see any potholes here. There's going to be striped parking at the property management office. There's going to be some handicap spots. There's going to be perhaps even street signs designating the street names. So the addressing for mailing is a little bit easier because each home perhaps has its own mailbox and address. You're going to see amenities in terms of a pool, a clubhouse. Sometimes you'll see a bocce ball court or pickleball, right? And of course, that's especially true if it is a 55 plus community because the seniors need something to do on a day-to-day basis, and those amenities help attract new tenants. Management, very professional management. There's probably a fairly sizable property management office with 1 to 3 people working in it. A 4-star park might have on-site maintenance staff. And so this is going to be a professional organization. Even if it is not technically a large company with a big portfolio of mobile home parks, it might only be one mom and pop operator, but they are running it like a very real business that is extremely professional and is taking care of every little detail at the property. Infrastructure, once again for lenders, going to be modern. It's going to be connected to city utilities. Tenant profile, you're oftentimes going to see a lot of these homes that are paid for in cash. You do see that a fair amount in the 3-star parks, but with 4-star parks, oftentimes the majority of the homes are paid for in cash from an older tenant base. The lot rents are going to be, of course, higher by about $200 here versus the mid-range of a 3-star park. Community feel, self-explanatory. All right, buyer profile. This is going to be a mix of institutional private equity. Most of the buyers that focus on this type of park are not the high octane private equity groups that need to get a 15 IRR plus. It's rare. Maybe you buy something that is discounted, completely off market, and you get a steal and you can get those kind of returns. But this is what you would call a core deal, which is going to be a much lower investment return profile, 10 to maybe 12 IRR, because the lot rents have already been brought to market. It's a full park. It's in a great market. The tenant base is already quality. There's not really a lot you can do to drive value other than just buying it for an incredibly cheap price, which doesn't happen as often with a 4-star park. They rarely sell outside of a broker transaction where there's 10 plus buyers bidding on this. And so therefore you don't get the discounted pricing to be able to drive those kind of returns. So I would say this is mostly institutional buyers. Sometimes they can't go to private equity. Last, we have the 5-star park, which really is just a marginally nicer 4-star park. The main distinction I tend to put between 4 and 5-star is just feeling like a subdivision. So a 4-star park might feel like a retirement community, but still a mobile home park. Whereas a 5-star park is going to feel like a subdivision. It's going to feel like just a traditional community of stick-built homes where you're driving through a nice suburb and you don't even feel like you're in a mobile home park. These homes might even have garages. They might have actual sidewalks with curbs, or they might have the rolled curb version, which is kind of like a baby sidewalk. But it's going to feel a lot different than your typical mobile home park. It's going to feel, once again, more like a subdivision. And then for the rest of the categories here, you can think of a 4-star park, but think about everything being top tier. So they just do every little category incrementally better. It makes it a much more high quality experience, a quote premium service level in the manufactured housing space relative to a traditional affordable, as compared to the 4-star park we walked through, where still everything's nice, but it's not polished, and everything in property management is just dialed, right? They just have nailed everything. There's basically nothing you can do to come in and upgrade this park. A 5-star park is just done, is how I think of it. And so the type of buyers that are looking at these types of parks, a 5-star park, are often the lowest cost of capital buyers. A publicly traded REIT, Sun Communities, ELS, something where they don't need to make a double-digit IRR right away. They can make low cash flow, but hold it long enough where they can slowly, incrementally increase that lot rent, maybe expand the park, or maybe it's just their beachhead into a new market where they're going to quote overpay for this asset, but that's going to give them an entry to the market, will be their showpiece. Then they can add on other parks in the area that will offset perhaps the lower returns from this trophy 5-star asset. Yes, you will get some sovereign wealth funds and some institutional buyers in this space, but you're not going to get a bunch of private equity firms that need a 15 plus IRR return here, even more so than, of course, the 4-star parks that we talked about, where you do get some of those buyers because there are more dials that they can turn to increase the value. 5-star parks, there's no value add program, so therefore you're not going to get value add buyers. Okay, that's just an overview of the star system in manufactured housing. Once again, it's helpful for shorthand when you're talking to prospective investors, buyers, sellers, where you know what type of park both of you are talking about. And lastly, make sure you know what you're doing if you're going to try to tackle a 2-star park. Remember my advice about 2.5-star parks. A lot easier to pull off than a true 2-star or even 1, God forbid. My advice would be to focus on this 2.5 to call it 4-star range. That's really where vintage capital likes to invest. That's where I think the best risk-adjusted returns are in this space. Yes, you can get some 20 plus IRRs down here and the 2-star rating. You can't get them over here unless you just get extremely lucky with a one-off deal. But that's going to be the range. The range is going to be 20 plus IRRs with a lot of headaches, hassle, and risk to maybe 9 IRR if you're lucky with less risk. But you're going to have big capital budgets to deal with the ongoing maintenance to make sure you're keeping this at a 5-star level. Some people will even buy 7, 8 IRR, just true core type of returns, almost like a bond. So that's the range. And so that's why you're probably going to want to focus in this area. It's the most bang for your buck without taking on too much risk. All right, so that's the star system. Obviously not scientific, but this is the best system that we got, and this is what we're using, so we're going to keep going with it. All right, thanks everybody.